Welcome. My name is Virgil Dismeyer, and I will be your host and narrator today. It's great you are thinking of becoming a business owner. We will attempt to show what it takes using the background and experience of one of our members, primarily myself. My background is the basis for this content. I was a corporate manager of many department heads. I was also a small business owner. And I have been a SCORE counselor for 19 years. So we have seen a lot of ideas and different clients in those period of time. Many people want a formula for success, but there is no such thing. Different people with different backgrounds have illustrated a broad range of success and failure. This is a key part of our webinar training curriculum. Remember, you can take this webinar anytime and any place. We will follow this 6-step process to answer, are you ready to start a business? There are free resources that I will cover later on in step number 6, but there are many free tools also discussed in the other steps as we go forward. This is how an ad might read if you were looking for an entrepreneur. If it were to run, there would be few takers. Think of yourself as an exception if you want this job. A few key observations. It is good to be your own boss. You reap the benefits of your hard work, and you control your own destiny. A small business owner does everything. They have no corporate support system, such as I had when I was employed by a large financial institution. As an accountant, you learn new terms, even if you pay someone to do the work for you. As the company salesperson, you learn to take no for an answer, but keep plugging anyway. Cold sales can be very hard. As a parent, you need to balance your personal needs with your business needs. Remember, you are not alone. There are many resources of help, including your SCORE mentor. So let's start with step 1 to see if you are ready. If you are ready, this discussion may be only a review. For others, it may suggest some soul searching on your part. The key is, what do you want out of life? Do you want security, income, freedom, less than a 24/7 job? You determine what your goal is. Look at your skills. Some people are not cut out to own a business, or they may not be ready at this point in time. Starting a business requires homework of research and study. Funding a business may be an obstacle. Some new businesses only need, say, $5,000, and others may need $500,000. It will depend upon whether you are in a service or a product business, whether you own or lease your buildings, and so forth. Ask yourself, is there any rush? Maybe you should use your job to build a network or develop new skills or broaden your experience. In the corporate world, we use testing to build teams or hire a new manager. The SBA website will give you a simple yes or no quiz with basic suggestions. Read the article. Is entrepreneurship for you? Myers-Briggs self-analysis will ascertain if you are a task or a people-oriented person, or are you well-rounded. Mind Tools managerial grid will identify your style for team dynamics and areas to improve. If you have multiple owners, they preferably should not all have the same style. You should have some built-in checks and balances in your management team. Running a business takes knowledge and skills. Here are some proven resources to help you along the way. The Minnesota Department of Employment and Economic Development has a top reference for contacts, tax information, and other resources. Here are a few other helpful tips. And read a few books. It takes a rational manager to identify a problem, then make a logical decision. I found that this book and this concept helped me tremendously in my decision-making in a corporate setting. Use the must and wants of a rational manager to make decisions on buying equipment, hiring managers, and make other important topics. Time is your most important resource. Don't waste it. To learn new skills, there are several easy reading, inexpensive books, as I've cited. E-Myth Revisited teaches how to run a business versus having the business run you. Some skills are essential for any business owner. Here are some of the ones we feel are crucial. Learn the accounting language, even if you hire a third party to do the work for you. You will encounter accounting terms in loan agreements, business plans, tax returns, and so forth. Accounting is the language of business. Some corporations require 2 years of business school accounting to be a department manager because those managers set prices, create budgets, and run a small in-house business. Selling is hard for someone who has not done it before. This was my hardest hurdle. You have to ask yourself, who will do the selling if you don't? It requires an enthusiastic person and is an ongoing challenge. Time management, as I mentioned on the previous page, is required. Time is your most precious resource. Remember, you will be doing many tasks yourself until you are large enough for a staff. Learn to prioritize. Then hire others to do some task to free you up to utilize your strongest skills. Work with an associate or a mentor to offset weaknesses you identify in your skill set. Well, do you feel good about yourself so far? Did anything in step 1 deter you from wanting to be a business owner? You may have found some things that need work. Hopefully, you're ready to move on to step 2. And that's the assumption I'm going to make, is that you want to move forward. Step 2 in determining whether you're ready to start a business is to find the right business. What do you like to do, and what are you capable of doing? You have to weigh your experience and contacts. Remember, different types of businesses require different skills. Write a short mission statement of your goals to help focus yourself on the key opportunities and to keep yourself charged up. To find the right business, we will help you conduct some exploratory research on the market and the niche for you. This will take place in step number 3. Now, let's start narrowing down the range of issues. Will your business provide services or products? There is a great deal of difference between the two. Will you target consumers or businesses? Each require different startup costs and skills. Then, if you add domestic versus foreign vendor sources, the equation gets even more complex. Let's talk about a market. A market is defined as a group of people who buy the same way. A niche is a subset of the market that is served in a different way. A niche may be a unique feature, a range of service, or design for a specific age group. But find your niche so that you do not dilute your initial resources. Your physical location will depend upon which niche you pursue. Think about it. Do you want to start slow and keep working while you test your concept, or do you want to just plunge in? Also, what kind of entity will you create? Most new businesses elect to use an LLC form of entity. They are simple and pay no taxes. You, the owner, pay the taxes on the profits of the company. Give some thought also to how you want to get out of the business. You may want to view another one of our webinars called Concept Feasibility. It's very short, and it stresses some of those initial upfront thought processes that you should expose yourself to. Look at the slide and look at the 3 options. You've got 3 ways to start a business and 3 ways to be involved. Once you know your product and market, the next step is, how do you start the business? You can start a business from scratch. You can buy a franchise or buy an existing business. We will discuss each on the next 3 slides. There are also 3 ways that you can prepare to become a business owner. Do you want to risk it all on day one and jump in? Or do you want to learn on your current job and then launch your business part-time? There are so many options that you should think this through clearly, because it will potentially dictate the success or failure of your idea. Okay, you're going to start a new business. Starting from scratch is the choice that most people use to start a business. It can take longer, and it may not be the cheapest. There are many steps and to-do lists on the internet. Use SCORE, the SBA, or Google to find these steps. The SBA's guide to starting a business includes plan, start, manage, and exit. This site has also many free online courses on management, financing, marketing, e-commerce, and international. It is worth checking out SBA.gov's website. Here is a second way to start a business. There are over 750,000 franchise businesses in the United States. They account for over 14% of the private sector employment. Wherever you look, there is a franchise business. If this is your choice, please read what is called the Uniform Franchise Offering Circular on your area of interest. This circular is required by every state for your protection. Talk to other franchisees. And with a franchise, you are buying a system with ongoing support. You are in business for yourself, but not by yourself. Evaluate how you fit into the system and the restrictions on your freedom to modify the business model. For more detail, get the SCORE FranNet booklet called Roadmap to Success. The third way to go into business is to buy an existing business. This can be time-consuming to find and negotiate the fair price. There are two ways to buy a business. You can purchase the assets, including inventory, equipment, goodwill, patents, and so forth, or you can buy the business or the stock of that business. But along with that comes past liabilities, unrecorded lawsuits, and so forth. The value of a business is always in conflict between the buyer and the seller. Use a team to buy a business, including a business broker, an accountant to help assess the assets, and a lawyer to draft the documents. And use a SCORE mentor to discuss your areas of concern. But do your due diligence. For legal agreements, you might want to use NOLO.com as a resource for contracts. For example, on NOLO, you can find the operating agreement for a new LLC that has more than one member. Also, view the free webinar in the SCORE Minnesota Learning Center called Buying a Business. It was developed by an experienced local business broker. Another decision is what type of company structure will you use. All four of the initial points for type of legal structure are called pass-through entities, and they do not pay income taxes. The owners of these entities pay the tax. A sole proprietor, for example, combines personal and business. It requires a doing business as name to distinguish it from the owner. A partnership is dangerous and exposes your assets to your partner's actions. A limited liability company, or LLC, is simple and shelters your personal assets. S corporations are more complex and require issuance of stock. But none of these four types of entities pay income taxes. Make sure you understand that fact. The owners pay the tax, not the business. You also will have two names, your legal name and your domain name on the internet. Make them the same if possible. A website is a requirement for most businesses in this economy, as is the use of social media. Websites can simply be an internet business card or a means to sell product, provide support, and process returns. The SCORE Minnesota Learning Center includes several free webinars about website development and social media. What's next? Let's stop and assess where you are. You have two options at this point: proceed and or redefine your objective. If you still haven't been deterred, then proceed. You are probably ready to start thinking about a business plan as a roadmap for your journey. Likewise, start accumulating the necessary resources, which are information, assets, and so forth, and contacts to launch your business. If at this point your business does not look feasible or promising, then rethink your objectives. Evaluate different types of businesses and build on what you have learned. This does not have to be a dead end, but it should be a thorough thought process. On the preceding slide, I talked about a business plan. Many new entrepreneurs question, why do you need a business plan, particularly if they are going to self-fund and do not need outside financing? It's still a good idea to create a business plan for the points listed on the slide. Think of it as a roadmap to manage your business. It facilitates communication of your ideas. And if you fail to plan, you then may be planning to fail. Think of it as a checklist for yourself. The financial projections will be needed by investors or lenders, or think of it as an informal budget for yourself. A business plan helps you to focus because you cannot follow all of the distractions you will encounter as you go through this process. SCORE mentors are good to help you in this step. View the webinar called Business Plan Homework to see how much work is involved for you to launch a new venture. Okay, we're ready for step 3, and we're going to concentrate now on market analysis. These are the elements of your market analysis. Research turns assumptions into fact and data. So study this slide later on when you print out the slides so that you can concentrate on marketing. Usually this is the weakest part of a new business, because if you have never been in business, many of these things will be strange to you and may have to involve some educated guesses. So first of all, let's describe what you offer. You must be able to do this in a few words. Many counselors will talk about your elevator speech. This is a short statement of what your business is about so that you do not ramble and the listener can grasp immediately what you're about and why you're in business. Write down a definitive description of your product or service. Include the special niche that you are targeting. But you must understand very clearly what it is that you are going to offer, whether it's a service or a product. Okay, we now know what it is you want to offer, but who are you going to sell it to? Please take time to identify your target market. Who are they? What common traits do your potential customers have? Are they teenagers or seniors? Are they interested in sports or the arts? Where in the world are they located? Are they in your backyard or across the country? And how many of them are you there, so that you know what the potential is? Ask yourself how your business will differentiate you from your competitors. Do you have a larger variety? Is your quality better? Do you provide full service or no service? The bullseye is your niche. You will need to know your prospects very well. Everyone is not a prospect, even on the internet. Narrow down the universe. How and where does your product or service fit in? Collecting data will require you to dig and digest the facts that you uncover. I have found that Reference USA at the library is an excellent resource. They break statistics down by businesses and individuals. So if you're selling to a business, you can identify the numbers and the locations of those prospects. If you're selling to individuals, you can likewise gather demographics on them. If you live in the Twin Cities, you may want to look at publications put out by the Metropolitan Council. The government websites also contain good data. And don't forget to look into trade associations for your industry. That's where you will see the latest trends, how people are marketing, and so forth. Now, you have to know who your competitors are. You have to know your competitors as well as your prospects. Who and where are they? What is their range of similar products? And what are their selling messages? Check out their websites, their prices, and the policies. There is an old Chinese proverb, I'll quote for you. If you know your competitor very well, you can win half of the battles. If you know yourself well, you can also win half the battles. But if you know yourself and your competitor very well, the odds are you can win every battle. Now we're going to decide about your target market. How big is your market niche? Every business is assigned a 6-digit code used by the government to classify your business. It will be used whether you're an LLC or an S Corp. It's just a way to group like businesses. To give you an idea, there are 96 codes for consulting, management consulting to dairy farm consulting. But if you were in shipbuilding, there are only 8 codes. This information is available on census.gov. But remember, NAICS code is one of those numbers that you will learn to recite from memory. Use the library databases. All you need is a library card, and you can do a lot of this research from home. As I have found, Reference USA is a great database because it covers both businesses and individuals. Again, I want to stress, look at your trade association and trade journals for information. Okay, are we ready to move on? 3 of the 5 steps are done. You know yourself, you know what business you want to start, and you know the size and demographics of your market. The next step is to start quantifying all of this data. So look at the right side of the slide. This is the work that is still left to be done. You have to make financial projections, evaluate funding resources, finish your business plan, and utilize all of the free resources that you can, and then launch your business. So step 4. Step 4 deals with financial projections, and there are 4 basic statements. This section, like the marketing section of a business plan, is difficult for many new business owners. You have to understand the 4 basic statements, what a break-even point is, and what ratios apply to your business. If you're not familiar with accounting, view the webinar, Basic Accounting for the Non-Accountant. If the content and purpose of financial statements is strange to you, then view the webinar, Understanding Financial Statements. Because we are in the area of accounting, as I said earlier, accounting is a language of business. The first statement is startup funding. This is a key statement, but you only prepare it once. This is something you do before you start your business. You must know what you need to start the business, which is on the left, and where the funds are going to come from on the right. What are you going to use the dollars for? Organizing expenses on this sheet includes things like legal fees, permits, and dollars to spend to get off the ground. Keep track of the money you spend prior to opening the business, because these funds can count toward your contribution as equity. They can also reduce the business net profit in your tax bill when you become profitable. All startup expenses are deductible for tax purposes on Schedule C for a single owner LLC or on Form 1065 for a partnership. You notice I have included operating losses for $37,000. Keep in mind that you will not make money day one. There will be a point where you are losing money, and then you will start making money. That's your break-even point. But you need money to get to that point. If your idea is good, don't run out of money. The dollars you will need will vary widely from a few $100 to thousands. This depends upon the type of business you're starting and what your products or services will be. This is true with a franchise, buying an existing business, or starting from scratch. Cost will vary depending upon the business, whether you are bricks and mortar or internet-based. Now, look at where the funds are going to come from. There are many sources, but all investors or lenders expect the owners to put their own money in first. It may range from 5 to 25%. Every lender will have different levels of risk that they will assume. you may have to put in more equity to attract a bank loan to actually launch your business. Business plans generally call for a 3-year profit and loss projection. They ask for projection by month the first year and by year for second and third year. It's fairly easy to project expenses, but it's hard to project revenues and sales. You will have to assimilate your marketing strategy with the size of your market to estimate these numbers. If you've never been in business and never sold this product, it will be a gut feel as to how much and how fast you can develop customers. You might think of this as a P&L as your first budget for your business. Experience and some operating history will help you improve your projections as the business evolves. This is a simple projected profit and loss, or as we accountants call it, P&L. Sales is your revenue from services or products. Cost of goods sold reflects the cost of the product sales for an inventory-based business. Expenses can be an extensive list of different categories. It depends upon what are significant categories. The final figure is net income. Note, there is no income tax deduction because most startup businesses will use one of the 4 pass-through legal entities where the tax is paid by the owner. A third statement is the balance sheet. From an accountant's standpoint, this is the least useful because it is a static measurement at a single point in time. It is a snapshot. Also, the numbers on a balance sheet are usually stated at cost, not market. An owner's equity figure is an accumulation of what you originally invested plus your net income or net profit from startup. This theoretically indicates what you could get for your business when you were to sell it. I say theoretically because remember, these figures on a balance sheet do not reflect market. The fourth statement is called cash flow. This statement and the bottom line of your profit and loss will be the same if you are on a cash basis of accounting. Accrual accounting introduces non-cash figures into the profit and loss and is much more complex. A non-cash expense is something like depreciation. So this is a vital statement. I'll show you an example. This is an example of an accrual-based cash flow statement. Note, depreciation expense is on the profit and loss as a cost. But since it does not use cash, we add it back here. Cash from investing results from transactions like buying a truck and, of course, interest. You might also add to cash by taking out a new loan, and that loan is shown on the balance sheet. The biggest reduction in cash may be the owner's draw. This is not a deductible business expense, and it is not taxable to you. Remember, you're the owner. It is your money. The bottom figure of $66,750 will be the same as the business's checking account. You, in effect, account for all changes in the cash balances of a business on this statement. Lenders are most interested in this statement because it tells them how much cash you have available to service their loans. The fifth statement is a break-even analysis. This is actually a calculation, not a financial statement. Business plan software, such as Business Plan Pro, will calculate this for you. But remember, you will incur losses and use cash up to the break-even point, which I've labeled number 6 on the screen. There are 3 key elements to this calculation. Fixed costs are fairly stable, and they are the horizontal line shown on the chart. Variable costs, which relate to the number of units sold, start at the lower left-hand corner at 20 and add to the fixed cost as you sell product. Sales, which is the red line, is the value of all the units sold. This calculation is important since it projects how long you will lose money. And this has to be included in your request for startup funding. Hopefully, you now see how all of these statements relate to each other. We now move to the 6th part of our financial section of discussion, and this is a ratio analysis of your company versus the industry. This is a way for you to test your financial projections. It is one of the ways a lender will evaluate your loan request. It is helpful to compare your ratios to real operating companies in the same industry. The NAICS code is how your competitors are grouped. The Risk Management Association ratios, RMA, are available for balance sheet and profit and loss statements. This information is available at your local library. And so as you think about going into business, do a ratio analysis to see whether your numbers make sense or whether you are smoking something. Okay. Step 5, we're getting close to the end. You've got your numbers, you know how much money you need. Now, where are you going to get the money to launch this business? There are many sources, and we have listed just a few here. To learn more about funding resources, listen to our webinar entitled Funding Alternatives. But a owner usually puts up a major part of the startup funds. 25% is not unusual. Lack of funding is the reason most startup companies languish and go broke. Remember, cash is king. You can reduce your startup requirements if you lease buildings or equipment rather than buying them. You can also gain equity capital by using non-traditional resources. You may have to admit members to your LLC just to gain cash. And of course, tap into their unique knowledge. Some of you will borrow against your IRA or 401k. This is a very specialized source of funding and requires that you set up a C corporation and have an attorney to arrange the transaction. A new source of funding is called crowdfunding, using the internet. The SEC is finalizing the regulations where you can raise money on the internet and not be deemed to be making a stock offering. Finally, banks are the normal source to fill the shortfall between cash and your need. Credit terms and rates fluctuate greatly depending upon the economy. Check out your primary bank to see what they might loan. And if your plan is really plausible, the bank may use an SBA guarantee to lower their risk. This will raise your interest rate, but it may be worth the added burden to get access to the funding. I put this slide in merely to list quickly the information that you may have to provide when you seek a bank loan. You might wonder when you look at this why they need personal financial data. The reason is a lender may require a personal guarantee or take a lien on some of your assets in order to grant you a loan for your business. Another reason is to flush out any smoke and mirrors in your own plan. Credit judgment is many times based upon your business plan, so take pains to make it stand up to scrutiny. Well, here we are. We're at step 6, and this is for me to urge you to use all free resources that you possibly can. SCORE is one of those free resources that would like to offer their expertise to you and then continue to counsel you as you grow your dream. SCORE has an online mentoring system which will help you seek expertise from experienced people from across the country. But make sure you use all the free sources. Don't be afraid to ask. Okay, it's time for you to make a decision. Ask yourself, is there anything missing? Can SCORE help? What is your decision? Is it a go or no-go decision? This webinar can only touch on the topics you may need to research. We have covered a lot of ground, and if you are uncertain, use your local SCORE mentor to help explain some of the things we have only highlighted. The decision and future is in your hands. Do you start now or defer to gain experience and context? If things don't look good, rethink your plans and goals. Then it is time for you to start implementing your dream and launch your business. In addition to what you've learned today, we strongly encourage you to seek mentoring at your local SCORE Minnesota chapter. We have 7 chapters in the state of Minnesota. SCORE volunteers know the local business community and can offer insight and experience to you, all free. If you are from outside Minnesota, we urge you to establish a relationship with your local SCORE chapter in that community. Visit the SCORE.org website to find a chapter near you. All you need to do is enter your zip code. And remember, SCORE offers email counseling to anyone in the country. Finally, if you have other questions, we have a dedicated email address to further serve you. We would be happy to discuss any points with you, but this shows you that there is help available. Just ask. As a nonprofit organization dedicated to helping you start or grow a business, we must make these disclosures. We rely on various experts to present a topic, and the content is strictly for your education. SCORE Minnesota, nor its chapters endorse any specific vendor or approach. And finally, Any screenshots of websites or products that I have used are provided only for illustration and may not apply to every situation. In closing, we want to give credit to 3 different parties. SCORE Minnesota is indebted to many people to develop and make these online, on-demand webinars available to you. The first is various people who have extensive experience in their field. These are our topic experts. Some are SCORE members and some are vendors and consultants. Today's topic expert was myself, who have worked in the corporate area, had my own small business, and have consulted with clients like you for 20 years. The second one we want to recognize is Veritas Marketing, who has reviewed and guided us in developing each of these webinars. Their technical knowledge has been invaluable. Third is Wells Fargo, whose funding commitment makes it possible to finance the infrastructure to mount and maintain these webinars on the Internet. With that, we wish you good luck and goodbye. Contact us if you have further questions.